What's going on, guys? Chad here. Just want to give a quick update on the markets, just vent some frustrations I got going. It's really difficult to you know, I I'm really glad that I don't talk to people about this because it would probably just end up in an argument or like if I would give somebody financial advice and I'm wrong, I would feel terrible. So take everything that I say with a grain of salt, but I'm just going to go through some charts that I've always look at every single day for the last 16 years. And um, yeah, there's a lot going on in the markets. It's pretty crazy. And so we can look down, as expected, we got some weakness in the NASDAQ. Um, it's basically just a layered decline. Every time we get a rally, it's starting to roll back over. Perfect downtrend going on in the NASDAQ right now. Every time it hits the upper channel, goes down. Pretty much lower channel, starting to go down. You can definitely see like stocks are kind of like oversold on a short term basis, but on the long term basis, not even close. So, we could get one more leg down before we go up. Um, and again, I don't expect any rally, significant rally. It just, just the ones that, I'm sure financial advisors are begging their clients right now to buy stocks. And I'm sure Wall Street is really wanting to get rid of their stocks right now. And so they need that rally to flip the stocks to their clients. And so their clients are holding the bag, is what I would assume. Now that's not guaranteed a rally, anyways. I think the stock market is in some major internal weakness and is more likely to go down than up. But the month of March is usually does opposite of February, and so February was down and March is up. Um, so far March has been down, so you know there's no guarantees in these patterns, but statistically March is the opposite of what February did. So just with that bias in mind, always keep that on the radar before you short these markets. You want to short into major rallies rather than or critical collapsing points where they're critical support is then going it goes through critical support. This is a chart of GDX divided by gold. So whenever it's falling, um, gold buys more GDX. So you can see it's this major trading range here. Um, it still hasn't even broken out. So this basically means that gold is outperforming the GDX, which is gold miners. I would think that's likely to change soon, but you never know in a stock crash. If you look at the 1987 stock crash, gold actually went up and the miners went down. So, we're in a very fragile time right now that, I think it would be stupid if you had money to lose, I guess. It would be stupid not to own miners, but they can definitely go down in the short term. However, that being said, they are starting to outperform gold, and that's a good sign. But I would put a tight stop um, in these. If you're playing with money that you can't afford to lose. And just going through this GDXJ to go out about gold again. I got a bunch of. So I like to look at like long-term charts, and then I look at like some monthly charts, quarterly charts, and then I go back down to weekly charts, and then hourly charts and minute charts. So when I see something that's like a long-term play, I go into the short term to look at what's happening in the short term to try to somewhat get at a good entry point. Dollar's going vertical here. GDP is going vertical, which is hilarious. I mean, you have this 2020 collapse, whole world economy shuts down, and GDP is now significantly higher. Give me a give me a break. Like there's anybody that does these statistics. I mean, it's mind-boggling that the public can buy this. That's just a side note. Going through Cardano. Cardano's in a downtrend, major downtrend. All cryptos are in a major downtrend, and we'll go through Bitcoin in a minute. This is crude, huge rally, a lot of a lot of selling here. So, we've broken out in crude, but I would expect it to be some kind of digestion before it either makes a rally or breaks down. I would expect it probably to make another rally, but I could see it trading sideways for a significant period of time. That said, crude is a loose cannon. It's basically the whatever's happened politically at this point is going to make crude do what it does. But no, clearly broken out of this huge resistance zones all the way back to 2008. So that's a big deal. Breaking out. Now, does it fall back down to 90 and consolidate and then jump up? Or does it just keep going vertical? It's anyone's guess, but this is a huge base, that's it's broken out of. So we'll see. But again, like look at this perfect, it's a decent uptrend and it's already hitting resistance there. So I would expect it to come back down, but we'll see. Let's go through Bitcoin. Bitcoin's got this huge flag going. 36,000 to 34,000. If we can close below 34,000, I would expect it to just tank. Which is, in the totally wrong time frame where everyone is expecting Bitcoin to go to the moon. They're bragging that Canadians are using Bitcoin, Russians are using Bitcoin, El Salvador has basically adopted Bitcoin. Governments around the world supposedly are starting to adopt Bitcoin, and Bitcoin is actually not making a new all-time high, which is interesting to me, to say the least. I mean, if it could break like these averages, 48,000, or even like the 200-day starting to tip down, which is a bad sign. But if it can break 50,000, I would expect it to at least challenge 68,000. But I think the bias right now is towards to collapse. And we'll see how far it goes. But again, Bitcoin's a wild horse, and it could. But I've overlaid a chart of Tesla with Bitcoin, and it's almost doing the exact same thing over the last year. The peaks and troughs are bigger in Bitcoin, so like Bitcoin obviously outperforms Tesla on the upside and downside, but they look almost identical, which is interesting. You also have this long-term chart of Bitcoin. You know, look at this thing. This is, a decent amount of years. Perfect uptrend, perfect downtrend. Outperformed right here out of this channel, but it's basically using that channel. You can kind of see it like right there. So it's hit it enough to make it somewhat symmetrical. And down for the sure on the downside or on the bottom channel, it's like really following this line. So I think that's at like 33K. So look out if we break 36K, I would expect this thing to tank at least down to like this next support's at like 17,000 or 20,000, 17,000, which is a lot of damage. Lot of damage. And then again, you got the long-term chart since it's been on this chart, and crossover on the MACD on the monthly chart. So that's something to be aware of. That Bitcoin may not be your savior. It may not be digital money, or it may not be money. It may just be a speculation. Same with all the other cryptos. Um, not, I like cryptos. I like the idea. I want to see a 3 to 5 year painful bear market before I want to see what actually rises out of the ashes if this market goes into a bear. Got the Nasdaq again here. It's forming a downtrend. Peak done in December. It's almost down, I think, 20 some percent. So basically, this down channel is pretty nice. It could pop up. The 200-day moving average is starting to tip down. It's all the way up here, so it could rally up to there. But the bias right now is down. And really, like this is the uptrend since 2009. Look at this thing. I mean, if you look at these three candles, like literally stocks really haven't done much yet for damage wise, and they're already down 20%. I mean, it could literally hit this 9,000 range and still be in an uptrend, like a long-term uptrend. So like that's major damage. I mean, that's like almost a half. I mean, I would expect it to actually, if it's gonna start tanking, I would expect it to probably find support at 7,000, maybe build another head and shoulders and actually fall even farther. But that's so long term, and that's like so hypothetical that like you don't know how much the Fed is going to print at that point. So they could shoot it back up to the moon. I mean, look at this 2020 drop. The whole world economy shuts down, worst ever. Like we're going into a mega depression and literally down for 2 months. That can only be explained by one thing, and I think everybody listening to this knows. Um, Again, more support on the Nasdaq coming in at 9,000. This is interesting. Chart. The Nasdaq divided by the U.S. dollar, which it tends to actually move a little faster than and gives a little bit of a signal before the bear markets start. It's like basically the dollar's outperforming and going vertical, which right now the dollar is going vertical, which I'll show in a minute, which is interesting because the dollar is a shit currency, but everybody goes to the dollar, or at least you need to, when you're getting out of all these trades, you literally need to buy dollars. So it makes sense that the dollar is going vertical when you're selling stocks because you're literally trading stocks for US dollars. And so like and the demand for dollars is just that's what happens in every crash. So the dollar literally goes vertical. But the interesting thing about this whole thing that when the dollar's going vertical is like commodities are holding up like really good for now. We will see, but commodities are totally holding up great, and that's interesting. Here's the put call ratio. So, whenever you see these spikes above this line, you get bottoms, um, and you get some major bottoms like 2009 um, bottoms. You can line these up. So, like, and this is the 2020 bottom, and the 2019 bottom. So these needles or these shoot up, these spikes, indicate at least a short-term bottom. Like you can see, like the 2008 crisis had a bunch of these before it actually bottomed out totally. So like, you know, these are bottoms and then followed by rallies and then another bottom and top and bottom and then the major flush out. Same thing with here in 2020. So like we have major room to fall here. The put call ratio like isn't even close to being a spike low. So that's where I would watch out in these markets at this point. CRB index, commodity index still exploding higher. This is interesting. Uh, the real estate, um, the opposite, shorting real estate, betting that real estate is going down is starting to bottom. It did in 2020, like it shot up way up. And these ETFs are shit, so these are just tradable because look at this. I mean, they just collapse um, when they're not moving in the favor. So if you buy these, you literally have to like get out when the trend is done. But man, this looks like it's actually bottoming, which would mean real estate may be starting to collapse. This is again the DRV fund. Look at how bad this has performed. But now it's like starting to move up. Interesting. ETH is same story with this crypto. I mean, it's basically in a downtrend, maybe even head and shoulders. And gold stocks, here we got gold stocks. Every time you get these spikes, you get a high. Um, and This is the gold miners' new highs, new lows percent index. So we got room to move up in these gold stocks before they generally peak, or not necessarily peak, but make a new high and then consolidate. So look for that to happen. Gold is looking great. It's in an uptrend. It's breaking out. March 28th is option expiry, so look for some shenanigans next week with the Fed meeting, and then March 28th there could be some flushing because that's what the banks do. They flush out longs, new longs to get out, to cover their shorts. It's a game. It's illegal, but that's what they do. To political metal. So again, MACD on the monthly chart almost crossing over. Look at this red line. Beautiful. This actually means something, obviously. it's been support and resistance this whole